Hope you guys are all having a great day today. In today's video, I'm going to go over, actually not today's video, but like in essence, the live stream. I'm going to go over the numbers that got released. I'm going to go over them with you guys because it's a little bit late on my side. But the numbers relatively look decent because if you remember, I'll actually go over the forecast quickly. They provided forecast for Q2 fiscal year 2026 from 15 to 25 million. Street estimates was pretty much on the 120 if I still have it up right about here. Let me see. Right about here. It was averaging about 122. High end was 125, and they ended up destroying it pretty much for that part. Basically, total company revenue came in and exceeded previously provided guidance, 129.6 million, increasing 3% year over year. And then a little bit key highlights before we get to those points as well. Additionally, for the second quarter fiscal year 26, deliveries year over year. Revenue growth, expanded adjusted EBITDA margins and GAAP profitability, as well as positive operating cash flow. And by the way, let me know if this is a little bit too loud right now. I'm just listening to when the conference call starts, and then I'll basically adjust it once they start talking, basically. QNX division achieves rule of 40 quarter with revenue and adjusted EBITDA above guidance, raises full year guidance. This is pretty awesome. The reason why this is pretty awesome is because, in essence, if they wanted to sell the division, it becomes more attractive to sell, and they could sell it for more amount, for a higher amount, if that makes sense. Now, I'm not expecting them to sell it. It's just more financially stable, in essence, and basically saying we're doing a good job. And then, in terms of secure communications division, beats revenue and adjusted EBITDA guidance, raises full year guidance, which is awesome. And then they did buy, if you remember my last video, I think that spike might have been a share buyback, and they said they returned 20 million to shareholders as part of the share buyback program. So an additional 20 million. Last time it was about 2.57 million shares bought, and I believe for roughly about 10 million, can't remember. So they doubled that amount this time around, which is pretty awesome. I'll read this later. This is just more of, I guess, a summary of the other stuff, quickly hovering over it. I'm going to go over this mainly because we got a couple minutes before they start the call. Total company GAAP and adjusted gross margin increased by, let me just double check if this is actually too loud. One sec. We still got a couple more minutes. Oh yeah, perfect. Nothing too loud. Awesome. Okay, so total company GAAP and adjusted gross margin increased by 4% points year over year to 75%. QNX revenue beat guidance and achieved 15% year over year growth to 63.1 million. At QNX segment, adjusted gross margin were flat year over year at 83%. 63.1. So they beat the forecast on the high end, which is awesome. It was previously 60 million. Last year, second quarter. So last year, same quarter, QNX, which was IoT, was 55 million. So it actually, so increased year over year and quarter over quarter as well, because last quarter I think was pretty much the same. Actually, no, last quarter was 59 million. So they got quarter over quarter growth, year over year growth for QNX, which is awesome. And then QNX adjusted EBITDA beat previously provided guidance at 20.5 million or 32% revenue. Secure communications revenue exceeded previously provided guidance at 59.9 million, decreasing year over year 10%. Secure communications segment adjusted gross margin increased 5% year over year. But in terms of guidance, they basically hit it on the high end and pretty much matched it, but a little bit exceeded. So last quarter, they said they were going to get 59 million for this quarter, and they got 59.9 million. And then I'm going to quickly go over this because I really want to get to the revenue portion before they start the call. Secure communications AR increased year over year and sequentially to 213 million. Secure communications DBNR was flat year over year and increased by 1% point sequentially to 93%. Secure communications adjusted EBITDA exceeded previously provided guidance at 9.7 million. Licensing revenue was 6.6 million and adjusted EBITDA was 5.6 million. Total company adjusted EBITDA exceeded previously provided guidance at 25.9 million or 20% of revenue. Total company GAAP operating income was 11.5 million, a 9.5 million increase sequentially and 9.3 million increased year over year. BlackBerry achieved another quarter of GAAP profitability with GAAP net income of 13.3 million and adjusted net income of 24.2 million. GAAP basic earnings per share was 2 cents, and non-GAAP earnings per share was 4 cents, beating the previously provided guidance. These are actually good numbers. Operating cash flow for the second quarter beat expectations at positive $3.4 million. $20 million was returned to shareholders by repurchases of approximately 5 million common shares during the quarter. Yeah, so double the last amount in terms of cash. Total cash and cash equivalent, short-term and long-term investment, therefore decreased by $18.4 million sequentially to
Good morning,
$3,360.
and welcome to the BlackBerry second quarter fiscal year 2026 results conference call. My name is Michael, and I will be your conference moderator for today's call. During the presentation, all participants will be in a listen-only mode. We will be facilitating a brief question and answer session towards the end of the conference. Should you need assistance during the call, please signal a conference specialist by pressing star 0. As a reminder, this conference is being recorded for replay purposes. I would now like to turn today's call over to Martha Gonder, Director of Investor Relations, BlackBerry. Please go ahead.
Thank you, Michael. Good morning, everyone, and welcome to BlackBerry's second quarter fiscal year 2026 earnings conference call. Joining me on today's call is BlackBerry's Chief Executive Officer, John Giamatteo, and Chief Financial Officer, Tim Foote. After I read our cautionary note regarding forward-looking statements, John will provide a business update, and Tim will review the financial results. We will then open the call for a brief Q&A session. This call is available to the general public via call-in numbers and via webcast in the investor information section at blackberry.com. A replay will also be available on the blackberry.com website. Some of the statements we'll be making today constitute forward-looking statements and are made pursuant to the safe harbor provisions of applicable U.S. and Canadian securities laws. We'll indicate forward-looking statements by using words such as expect, will, should, model, intend, believe, and similar expressions. Forward-looking statements are based on estimates and assumptions made by the company in light of its experience and its perception of historical trends, current conditions, and expected future developments, as well as other factors that the company believes are relevant. Many factors could cause the company's actual results or performance to differ materially from those expressed or implied by the forward-looking statements. These factors include the risk factors that are discussed in the company's annual filings and MD&A. You should not place undue reliance on the company's forward-looking statements. Any forward-looking statements are made only as of today, and the company has no intention and undertakes no obligation to update or revise any of them, except as required by law. As is customary during the call, John and Tim will reference non-GAAP numbers in their summary of our quarterly results. For a reconciliation between our GAAP and non-GAAP numbers, please see the earnings press release published earlier today, which is available on the EDGAR, Cedar Plus, and BlackBerry.com websites. And with that, let me turn the call over to John.
Well, thanks, Martha, and thanks to everyone for joining today's call. Q2 was another strong quarter for BlackBerry, with all three of our divisions beating the top end of guidance. The company revenue for the quarter was stronger than expected, growing 3% year over year to $129.6 million. BlackBerry delivered another quarter of solid profitability, with total company adjusted EBITDA reaching 20% of revenue and GAAP net income being positive for the second consecutive quarter at $13.3 million. Likewise, non-GAAP EPS beat guidance at positive 4 cents. Despite the headwinds of significant tax payments in the quarter, we were able to return to positive cash flow earlier than anticipated, with operating cash flow at $3.4 million. At a divisional level, QNX beat expectations for both revenue and adjusted EBITDA to achieve a Rule of 40 quarter. We delivered 15% year-over-year revenue growth and a 32% adjusted EBITDA margin for Q2. QNX revenue for the quarter was $63.1 million, primarily driven by strong royalties. These solid results are a testament to how the QNX team continues to successfully navigate what remains an uncertain macro environment. This is further evidenced by QNX design wins being ahead of plan in Q2 after a slower start to the year in Q1. The pipeline for potential design wins in the second half of this fiscal year looks solid. In the quarter, we secured a number of noteworthy design wins, including a mid-eight-figure design win in the Chinese market with a leading global Tier 1 supplier to power ADAS applications. QNX is also progressing with ecosystem partners. BMW and Qualcomm announced that they have jointly developed a scalable platform called Snapdragon Ride Pilot, which is built on QNX. This product, offered by Qualcomm to all global automakers and Tier 1 suppliers, enables an active safety system that is continually updated with cloud-based information from global fleets. We secured another win for our cloud-based development platform, Cabin, with one of the top 5 global automakers. This was also a significant quarter for our QNX Sound product, where we had a pivotal win to deliver software-defined audio with a leading domestic Chinese automaker and a leading branded audio partner. This marks a significant step forward in adoption of this product. Like in auto, we continue to see growth in a number of high-performance, safety-critical use cases in the general embedded space. In particular, we're seeing progress in the verticals where we've been increasing focus and investment, namely medical instrumentation, industrial automation, and robotics. During this past quarter, we secured a significant win with a leading North American camera and vision module supplier for QNX to be used globally in automated mobile robots and subsequently in humanoid robotics. This is another data point that our investment strategy is showing returns. During the quarter, the latest version of our QNX operating system passed the safety and security audits conducted by TÜV Rheinland, and QNX OS for Safety 8.0 was formally released on July 31st. Having the product fully certified by arguably the leading body in this space allows customers to demonstrate the product's compliance with rigorous international standards. The QNX 8 pipeline continues to grow and remains approximately 50-50 between auto and GEM. And this pipeline is being converted. In Q2, a top global automaker purchased new QNX 8 development seat licenses. We also announced that QNX OS for Safety 8 will power NVIDIA's Drive AGX Thor development kit. This kit enables software development on the NVIDIA AGC Thor SoC, a truly powerful next-generation chip that facilitates generative AI. QNX forms the foundation for NVIDIA's Drive OS that is often used in conjunction with NVIDIA chipsets in the car. There was also meaningful progress for the vehicle software platform that we're investing in and have partnered with Vector Informatic to develop. The platform pre-integrates our operating system with a number of middleware components. We believe that this platform will help automakers accelerate their path to software-defined vehicles, greatly expanding QNX's addressable market and increasing our overall software content in the car. We were excited to launch the first early access version of this product this past quarter, and we're working closely with Vector to implement and accelerate our go-to-market strategy. We continue to see momentum with QNX Everywhere, our initiative to accelerate the growth of the QNX developer and ecosystem community through the availability of our products for non-commercial use and the development of QNX-centric training programs. We see this as a strategically important program that aims to significantly strengthen the position of QNX in the market for the long term. This past quarter, MIT was one of 6 universities to sign up to using QNX in their engineering curriculums, with more than 4,000 students having already attended QNX learning sessions globally. So, in summary, despite the continued uncertainty in the automotive market, BlackBerry's QNX division delivered strong results in Q2 and progress across all our key growth initiatives. And we have a solid pipeline of opportunities for the second half of the fiscal year. Moving now on to Secure Communications Division, which had another solid quarter, beating the top end of our guidance range and finishing higher sequentially with quarterly revenue of $59.9 million. The better-than-expected results were driven by a combination of slowing customer churn for UEM, as well as some upside for both Ad Hoc and SecuSmart. Annual recurring revenue, or ARR, grew by $4 million in the quarter to $213 million, and the dollar-based net retention rate, or DBNRR, improved to 93%. Although the revenue was down year over year due to a significant device refresh cycle last fiscal year, this was a good quarter for sales of SecuSmart to the German government, including a 5-year deal with a key government agency for hosted secure voice services. Offering a hosted service is a new recurring revenue business model for BlackBerry that, together with more software-only sales, can help create a more predictable revenue profile for the SecuSmart business. This deal can serve as a test case and open the door for future deals of this nature. We also saw traction with deployment of SecuSmart on iOS devices. In the past, SecuSmart was largely limited to Android. The R&D effort to add support for iOS has significantly increased the size of our potential opportunity within the German government. Outside of Germany, this quarter we secured a deal with a Canadian government entity, and the pipeline of opportunities globally remains robust. During Q2, we secured a large renewal and upsell with the U.S. State Department for our Ad Hoc Critical Events Management platform. This deal includes 4 option years, which could result in this being a 5-year renewal. FedRAMP high approval and new features added to the Ad Hoc platform recently were key for the State Department in expanding their relationship with BlackBerry for their emergency notification and accountability platform. In addition, we secured Ad Hoc wins with the United States Coast Guard and Veteran Affairs, among others. As mentioned, this quarter we saw the continuation of the trend for reduced customer churn for UEM. An increased focus on data sovereignty plays to BlackBerry UEM's strength, especially with on-premise deployments. In particular, we secured a number of non-government renewals that helped solidify the base. Renewals including a number of major financial institutions, as well as Rolls-Royce, leading law firm Hogan Lovells, defense engineering firm Babcock, the IRS, and the Department of Homeland Security, just to name a few. During the quarter, BlackBerry UEM became the first solution to be certified by Germany's Federal Office for Information Security, or BSI. Meeting these very rigorous standards shows BlackBerry's commitment to this market and opens up potential for UEM expansion opportunities in Germany. Overall, this was another solid quarter for Secure Comms. The pipeline of potential large deals with government customers continues to be strong. However, sales cycles remain relatively long. Touching briefly on IP licensing, in addition to the run rate revenue from pre-existing arrangements, which remain solid, we secured a net new one-time deal in the quarter that helped revenue to beat expectations at $6.6 million. And with that, let me now turn the call over to Tim for more color on our financials.
Thank you, John, and good morning, everyone. As John mentioned, revenue for the total company in the quarter exceeded the top end of guidance at $129.6 million. Operating leverage, driven by the strong top line, combined with tight cost control, enabled us to deliver expanded profit margins. Total company adjusted gross margins expanded by 4 percentage points year over year to 75% and remained flat sequentially despite a greater proportion of SecuSmart hardware in the mix. Adjusted operating expenses were approximately 5% lower year over year at $74.8 million. This reduction is in spite of increased investment in strategic growth drivers for QNX, namely our GEM expansion and the vehicle software platform, as well as FX headwinds from a weaker US dollar this fiscal year. This demonstrates how we're successfully controlling costs and driving efficiencies across the business. As was the case in Q1, this past quarter, we benefited from approximately $4 million of grant funding from the Canadian Government Strategic Innovation Fund. We do not expect to receive any further P&L benefit from this program for the remainder of the fiscal year. As a result of top-line growth, expanded gross margins, and reduced operating expenses, total company adjusted EBITDA grew a very strong 72% year over year to $25.9 million. Adjusted net income for Q2 was $24.2 million, and GAAP net income was $13.3 million. This is a $33 million turnaround in GAAP net income from the $19.7 million loss in the prior year. Indeed, it is also a significant expansion from the $1.9 million of positive GAAP net income we achieved in Q1. Adjusted EPS also beat expectations at positive 4 cents. QNX revenue beat the top end of the guidance range at $63.1 million, representing 15% year-over-year growth. QNX gross margins expanded by 2 percentage points sequentially and were flat year-over-year at a strong 83%. QNX's adjusted EBITDA in Q2 marked the most profitable quarter in the division's history, with a 32% margin. Adjusted EBITDA exceeded the top end of guidance at $20.5 million, a 56% year-over-year increase. Revenue for secure communications exceeded the top end of guidance in the quarter at $59.9 million. Gross margin was higher year-over-year and lower sequentially at 66% as a result of revenue mix. Secure communications remained solidly profitable despite the SecuSmart hardware component in the product mix for Q2, delivering stronger than expected adjusted EBITDA at $9.7 million, or 16% of revenue. Finally, our licensing division delivered better than expected revenue of $6.6 million, leverage from which drove adjusted EBITDA higher to $5.6 million. Adjusted corporate operating costs, excluding amortization, came in at $9.9 million in Q2, in line with guidance. Despite paying $19 million of tax due from prior years, the company had better than expected conversion of profits into cash and was able to deliver positive operating cash flow of $3.4 million and free cash flow of $2.6 million in the quarter. Total cash and investments increased year over year by $99.2 million and decreased by $18.4 million sequentially to $363.5 million. The sequential decrease was as a result of us continuing to take advantage of what we believe to be an undervalued share price and repurchasing approximately $20 million or approximately 5 million shares at an average price per share of $3.97 in the quarter. These shares have been subsequently cancelled, bringing the total number of shares removed by the program to date to 7.6 million. As you know, we're investing for growth, especially in our QNX business. Despite this investment, we expect to deliver positive cash flow this fiscal year, further increasing our net cash position. As a result, we will continue to consider where it makes sense to buy back additional shares. Turning now to financial outlook for the third fiscal quarter and the full fiscal year. Overall, we have seen a stronger than expected first half of fiscal year 2026 for both the QNX and Secure Comms divisions, and we're very pleased to be able to raise expectations for both revenue and adjusted EBITDA for the full year as a result. When we first presented full year guidance during last fiscal year's Q4 earnings call, there were a significant number of unknowns. We faced a backdrop of significant tariff uncertainty and possible threats from DOGE and other potential government policy changes. While these changes have not gone away, we feel that the level of uncertainty has decreased. As a result, we are pricing in less downside risk in today's guidance than previously, and the top end of the range requires further improvement from the macro and other secular trends. We expect revenue for QNX in Q3 to be in the range of $66 to $70 million, and for adjusted EBITDA to be in the range of $13 to $17 million. As I mentioned, we are increasing our full year revenue guidance by $3 million at the midpoint, while also narrowing the range to $256 to $270 million. Likewise, we're raising our full year adjusted EBITDA guidance by $11 million at the midpoint to be between $64 and $73 million, as QNX continues to deliver a combination of double-digit growth and strong profit margins. For Secure Communications, we expect revenue for Q3 to be in the range of $60 to $64 million, and for adjusted EBITDA to be between $12 and $16 million. For the second quarter in a row, we are raising our full year revenue guidance for Secure Communications, such that the range is now $239 to $247 million. We're also raising our guidance for adjusted EBITDA, with it now expected to be between $38 and $48 million. For licensing, we reiterate our prior guidance for revenue to be approximately $6 million and adjusted EBITDA to be approximately $5 million per quarter. For the full fiscal year, we're holding revenue guidance at approximately $24 million and adjusted EBITDA at approximately $20 million. We continue to expect adjusted corporate OPEX, excluding amortization, to be approximately $10 million a quarter or $40 million for the full fiscal year. At the total company level, we expect revenue for Q3 to be in the range of $132 to $140 million and adjusted EBITDA to be between $20 and $28 million. Given the increased full year guidance for both QNX and Secure Communications revenue, as well as adjusted EBITDA, we are raising guidance for the total company as well. For the full fiscal year 2026, we are raising the midpoint for total company revenue by $7 million and now expect it to be between 519 and 541 million. And we're raising guidance for adjusted EBITDA at the midpoint by $12 million to be in the range of 82 to 101 million. For non-GAAP EPS, we expect it to be between 2 and 4 cents in the third quarter, and to now be between 11 and 15 cents for the full fiscal year. Now that most of the restructuring and tax payments for prior years are behind us, we expect to be cash flow positive for the remainder of fiscal 2026. We expect positive operating cash flow for Q3 in the range of a solid $10 to $20 million. For the full fiscal year, we're raising our guidance and expect to generate between $35 and $40 million in operating cash flow. This does not include the additional $38 million of cash from the second tranche proceeds from the sale of Cylance to Arctic Wolf that we expect to receive in Q4. This is classified separately as cash flows from investing activities. And with that, let me now turn the call back to John.
Well, thanks for that, Tim. And before we move to Q&A, let me quickly summarize what was another strong quarter for BlackBerry. We delivered year-over-year top-line growth and expanded gross margins while simultaneously decreasing OPEX. This combination allowed BlackBerry to deliver rock-solid profitability in Q2. QNX delivered a Rule of 40 quarter with 15% revenue growth and 32% adjusted EBITDA margin. Secure Comms saw improvement in its key metrics and delivered a solid 16% adjusted EBITDA margin. We exit the first half of the fiscal year having delivered top-line growth, expanded profit margins, and positive cash flow generation. So with that, let's now move to Q&A. Operator, could you please open up the lines?
We will now begin the question and answer session. To ask a question, please press star 1 on your telephone keypad. Please make sure your line is unmuted. Again, press star 1 to ask a question. We'll pause for just a moment to allow everyone an opportunity to signal for questions. We request that you limit yourself to one question and one follow-up. And your first question comes from Luke Junk with Baird. Please go ahead.
Good morning. Thanks for taking the question. A couple of QNX questions for me. Tim, maybe to start with, could you just double click on how we should think about operating leverage in QNX from here? So, growing in the mid-teens year over year this quarter, but OPEX in terms of R&D and sales and marketing still coming down year over year in aggregate, which gave you really good leverage. I know some of that was the R&D credit. If we just pull on that string, what does it say about the business from here from a leverage standpoint, and maybe specific to guidance and the sequential walk, just anything we should be keeping in mind, one-timers or seasonality into the third quarter? Thank you.
Yeah, great question, Luke, and good morning. So I see a lot of leverage in the QNX model. I mean, we're already at gross margins of 83%, and over time we should see that improve, particularly as the mix of royalties starts to increase, as we start to see some of these bigger programs move into production. On the cost, the OPEX side, you're right, we had a $4 million benefit this quarter from the CIF funding, but generally speaking, we are investing in both R&D and sales and marketing. Particularly sales and marketing to drive that GEM opportunity that we've been talking about. But regardless of that investment, I still see leverage through the model. I think the investment we're putting into R&D will start to stabilize, and whilst we'll continue to invest in sales and marketing, it won't be at the scale that we hope to grow the top line. So you add all that together, very strong gross margins, leverage coming out of OpEx. We should see some pretty strong adjusted EBITDA margins going forward.
Got it. And then for my follow-up, John, you mentioned that I think it was a mid eight-figure design win in China with the tier one for ADAS applications. Just be curious if you could maybe expand on your overall approach to the China market. Just strategically, certainly that's a market in automotive that's at the bleeding edge of software-defined vehicles right now. Just curious how you lean into that in China specifically, and then sort of the offshoot of that would be, some benefit I would anticipate repatriating that into the rest of the world as well. Thanks, John.
Yep. Thanks, Lou. Yeah, I think, one of the interesting dynamics with the China market in particular is we're seeing, due to some incidents, some safety issues, and some concern, we're seeing that market shift more towards safety critical software and the need for a high performance type of capability where maybe, a few years ago, it wasn't, that the demand for those kinds of capabilities weren't quite as rich. And I think that has really opened up. There's, I think, some high profile accidents that happened that has really awakened that market to the need of something to the magnitude of our SDP8 and some of our capabilities, which we think really are differentiated from everybody else in the market. So I think that trend is a positive one for us, and it certainly enabled us to make some progress this particular quarter. But that in general, as more of that shift goes towards safety critical and the higher end, higher compute, higher performance capabilities, we think that plays into our strength and how we're performing in the marketplace. And it's also further evidenced by how the silicon players, the ecosystem partners, are leaning in with us with our relationships with Qualcomm and NVIDIA and the progress we're making there. So hopefully that gives you a little bit more color on why we feel we're making a little more progress, not only in China, but around the world.
Yeah, very interesting. I'll leave it there. Thanks, John.
And your next question comes from Paul Treiber with RBC Capital Markets. Please go ahead.
Oh, thanks very much, and good morning. Just also a couple of questions on QNX as well. Just on the outlook for the year, the outlook continues to be back-end loaded for QNX. Can you just remind us again of what you see as a driver of the pickup in the back half of the year? And does that reflect either licensed or professional services, which is more one-time in nature, or is it a ramp in royalties?
Yeah, good question, and good morning, Paul. So if you look at the trend, the revenue trend or pattern really for QNX for the last couple of years, it has been back-end loaded. It's pretty much a sequential increase all the way through, with Q1 always being the lowest and Q4 always being the highest. Some of that is seasonality around when design work begins. Obviously, the biggest kind of moving part from quarter to quarter is development seat licenses, and that is driven really by start of programs, design work, and that tends to be towards the back end of the year. So we probably expect to see that pattern, generally speaking, going forward, but we'll have to see. But that's really what's driving it. But over time, we're also seeing growth in royalties as some of these programs start to come online. So quarter over quarter, generally, you start to see growth in royalties as well.
And then big picture on QNX in the auto market, you mentioned a lot of uncertainty at the beginning of the year. The feedback that you're getting from auto OEMs in terms of the prioritization of new platform development, and you mentioned the potential for seeing the move of big programs into production. Are you hearing that these big programs are back on track and the plans have moved maybe back to where they were previously, whereas there's concern that they might have been pushed out?
I wouldn't go as far as to say back on track, because I think everything has no doubt shifted to the right. But I would say programs are starting to come online. Obviously, not as quickly as we would have liked at the beginning. I don't want to kind of paint the picture that we're totally through all of the headwinds that we saw. I mean, the tariff uncertainty has now become kind of really just a more certain tariff headwind. But the challenges of developing software remain complex, and those have certainly not gone away. So I think inevitably over time you're going to see problems get solved and vehicles come online. But I wouldn't paint the picture that we're totally out of the woods. But I think everyone's got just a little bit more certainty than we had at the beginning of the year when we gave guidance on Liberation Day.
Yeah. And just to further to that, what Tim is outlined. The S&P took the global light vehicle production. We're feeling that's increased. The OEMs maintaining their guidance is another kind of data point that things are starting to stabilize. So definitely April, May, June, it was kind of feels like the pause button was pressed, and it's not quite completely ramped, but we definitely feel like it's being unpressed, and there's a little more kind of momentum going on as we look at the second half of the year.
That's great to hear. I'll pass the line.
Again, if you have a question, please press star, then one. Your next question comes from Todd Coupland with CIBC. Please go ahead.
Yeah, good morning, everyone. I had a question on QNX. I was wondering if you could update us on the backlog and the backlog growth in the quarter. And as a follow-up, with 15% growth in QNX in Q2 and double-digit implied in the second half of the year, are you comfortably in double-digit growth range for QNX now? Just talk about the sustainability of that. Thanks a lot.
I'll take the first part. Maybe, John, you want to take the second. So in terms of backlog, obviously, this is not a quarterly business. You have some fairly wild volatility in the design win dollars that you get from quarter to quarter, and that's really just timing of when those decisions take place. So that's why we give that metric on an annual basis to kind of normalize from some of that movement. But the color I'd give is that Q1, John mentioned the pause button. I think there was a challenge for a lot of OEMs, and hence a certain reluctance to commit to new designs. So Q1 was weaker, but Q2 has come back pretty well, and we're actually ahead of plan for Q2. And when we look at the second half, the pipeline of opportunities looks really solid. So we're feeling really good about where we are going forward, but obviously we had to navigate through what was a challenge in Q1, and we'll give you an update on backlog as normal at the end of Q4. And then on the growth, John.
Yeah, I really feel between Todd the progress that we've got in terms of what we've already booked and some of the new programs that are coming online, our vehicle platform initiative, the adoption of SDP8. We talked about the sound win, QNX Sound, which is another, and we're very excited about the diversification into GEM with some of the wins that we have in some of the robotics space. So, I mean, all of that, I think, lines up to, what we've given from a guidance standpoint as a solid second half of the year. And, between that and the pipeline that Tim's talking about, we're optimistic that we're going to keep the momentum going into not only the second half of the year, but as we think about next year as well.
Great, thank you.
This concludes our question and answer session. I would like to turn the conference back over to John Giamatteo, CEO of BlackBerry, for closing remarks.
Very good. Thanks, Michael. So before we end the call, I just wanted to mention some upcoming events that we're excited about that BlackBerry is going to be in attendance. The QNX team will be at eLive in Bonn, Germany, and the American Medical Device Summit in Chicago in October, and Embedded World North America in November. While our Secure Communications division will be at ITSA Expo and Congress in Nuremberg, Germany, and in the GITEX Global in Dubai next month. So if you're in any of these locations, please stop by the events at our booth, and we look forward to host you and talk to you more about the exciting the developments that are happening all across BlackBerry. So thanks everyone for joining the call today, and we'll look forward to talking to you next time.
This concludes today's call. Thank you for your participation. You may now disconnect.
All right, so the call was not too bad. It was pretty good. And then I just want to go over the numbers to finish them off, just to make sure this is for this year. And then cash flow. I left off here total cash and cash equivalent, short-term and long-term investments therefore decreased by 18.4 million sequentially to 363.5 million. And then also one thing to note, basically I'm going to re-listen to the conference call, and typically I post a video. Hopefully I'm planning this weekend to post what my thoughts, go over the conference call, key points, and then go over the numbers even more deeper. And then the reason I want to go over these numbers is just which they went over the call. So if you heard it, it's pretty good. Not all of it, but actually all of it, essentially, if you just listen to like in depth. But these numbers, I want to go over them quickly and then go over total company revenue all as well. And then just a little bit more key points. But overall conference call went well. Finishing off key points, and then we'll do review. So if you want to be notified when I post that review in terms of the conference call numbers and all that stuff, consider following and subscribing so you'll be notified when I do. But business highlights and strategies announcements. QNX and NVIDIA announced general availability of NVIDIA Drive AGX Thor development kit integrated with QNX OS for Safety 8 to enable developers to accelerate development of next generation autonomous drive systems. QNX launches its foundational safety certified QNX OS for Safety 8 to streamline the development and certification of safety and secured critical embedded systems. So essentially this is a wrap up of what they've already done for the most part. And then I guess because I haven't kept you guys updated, just in case, I'll read the last few lines. BlackBerry became the first mobile device management MDM vendor to achieve BSI certification for BlackBerry UEM development with Apple, Indigo, and Samsung Knox. And then BlackBerry Global Affairs Canada and TMU, Rogers Cybersecure, Catalyst expands security training in Malaysia. And then BlackBerry appointed Barry Maines to its board of directors. And again, that MIT thing I think is beneficial. It's good. I messaged it in the chat. It's either two things. It's either for the long game or the long haul, and I'll leave more for the video, but I just want to say, because I think it's important, is like the long play kind of stuff, because the future engineers could essentially, because they're trained on that kind of stuff, future employers could be like, okay, you know what, we'll use QNX because it's more streamlined. We could use it for the future kind of our products. But at the same time, because NVIDIA uses it, and there's other companies that use it that are big players as well, I would argue it's more that the market's demanding the schools like MIT to potentially start training their engineers to use that kind of stuff, right? So if that is the case, that's even more beneficial, because that will streamline like the longer gameplay, like I mentioned, as opposed to being a longer gameplay. It's more like happening essentially in the next few years versus the long term, right? And then I'm just going to just read chat just in case, just for a sec. We're going to so that they want yeah, potentially, yeah. That's the thing too. Like, personally, this new team is doing a great job, and at the same time, it's hard to tell because, for example, actually, nah, never mind. Forget that thought, because I was thinking maybe they want to hold off on like potentially like not necessarily fireworks, but like ramping up quickly so they could buy back the remaining share buybacks. I doubt it. I think they would rather see the share price increase substantially in essence, because for the shareholders themselves, and at the same time they do have equity in the company as well, because the awards that they've been the shares that they've been awarded in general, right, for working at BlackBerry. So it's hard to tell exactly, but I do like how they exercise the shares, and at the same time double the amount than the previous share buyback as well. that basically I can't even say the word right now, but basically solidifies the fact that they do believe in the company. They believe in the company that the fact that it's undervalued, because in essence, when they first introduced it, some could have said that they just introduced it and opened the doors. And again, I'll mention more in the video, but I think this is important still. They open the doors to say like, oh, we see it as undervalued, but we won't necessarily act on the share buyback. That's what some people were kind of thinking potentially, but we've seen so far a total of $30 million acted on the share buyback. So in my opinion, I think that's great. But in terms of Q3 guidance, they have it at 132 to 140 million. Again, in the next video, so the next video will be basically going over this report and the conference call. The video after that will go over like forecasts, forward-looking statements, and forward-looking statements, or sorry, a little bit early at the moment for its time being. But in terms of guidance, compare street estimates, year-over-year, quarter-over-quarter comparison, stuff like that. But essentially, total company revenue coming in at 132 to 140 million for Q3. QNX is 66 to 70 million, which is good because we saw this QNX was the highest pretty much ever for this division. Secure communications revenue 60 to 64 million. That's good. So we're still seeing growth, which is both great from just the top of my head. Quarter-over-quarter growth, which is awesome for both divisions. Licensing revenue approximately 6 million. QNX segment adjusted EBITDA 13 to 17 million. Secure communications segment adjusted EBITDA 12 to 16 million. Licensing segment adjusted EBITDA approximately 5 million. Adjusted corporate costs approximately 10 million. Total company adjusted EBITDA 20 to 28 million. And then non-GAAP basic earnings per share 2 cents to 4 cents. Operating cash flow 10 to 20 million profits. And then right after this, I'm going to go over the revenue because that's important in my opinion. Total company revenue, they adjusted this to 519 million to 541 million. So that's good. This was adjusted. These two are adjusted, but I can't remember which one was adjusted exactly. And this stuff, in essence, pretty much the same, but I just want to go off this one. Operating cash flow 35 to 40 million. Previously, it was something, I forgot what the lower number was, might have been 25 to 35 million or 30 to 35 million, but they've increased the high end to 40 million, which is good. I think personally, in my opinion, again, by the way, be aware, I do own shares in the company, and I'm not a professional, so please do own due diligence and research before buying and selling. But in my opinion, they're increasing this, plus what they stated in the conference call. Again, I'll provide more in the next video, but if everything hits correctly, and they typically hit on the high ends, I expect this number to be increased as well, with this number increased as well in the next earnings for Q3. Now, in terms of everything else, in terms of revenue, all that stuff, I just want to go over one more number. So it's good overall. So total company revenue 13.4 million for this quarter, or not revenue, sorry, profits. So 13.4. So if you remember last year, like I mentioned, so I'll go over this as well. Again, more details in the next video, but I still think it's important. I think you guys want to, because before the market opens, right? It's beneficial. So you could argue last quarter, they beat last quarter. I think last quarter was 121 million. This quarter is 129 million. So we have quarter over quarter growth. That's good. But last year's was 145 million. If you remember, right about here, 145 million. So you could argue year over year decline. But last year, and I did touch up on this on the last video, last year it was an $18 million loss reported, right, for that quarter, versus this quarter, it's 13.4 million profits. So even though it's year over year decline, they're keeping money on hand. So that is beneficial in essence for the quarter. If I could find it, I think I passed it, but you get the idea, hopefully. Yeah, 13.4 million. So that's technically it's a better quarter overall, right? Now I have to go through the numbers in more depth. This was just more high level. Again, that'll be in the next video. And then let me just see if I missed anything. Maybe a buying opportunity. Yeah, potentially might be a buying out. Depends. I still think the company's undervalued, but it's hard to tell if like the spike ups might like fizzle down, because that's the only downfall about BlackBerry. Again, I do own shares in the company, and I do want to see them successful. And I'm not a professional, so who knows, right? It's hard to tell with the volume what happens and all stuff. And at the same time, the company is reacting in essence well for the stock. But the markets, be mindful that the markets that are down today, I think the job numbers when I was listening to a conference call came in at lower than expected or something like that. Can't remember 100%, but the markets are relatively down 0.5% for today, at least from the last time I looked. And BlackBerry's still doing like decent in terms of share price with relatively low volume. So that is good. So it's hard to tell how the stock will react in essence. But overall, I think the company is undervalued. But in terms of buying time, it's hard to tell exactly, right? You don't want to buy when it's increased volatility. But then at the same time, who knows if it just climbs up, then I don't want to be like, don't buy during increased volatility and then just climbs up and you miss your opportunity. It's hard to tell in essence. So that's why I'm saying I'm not a professional. Please do own due diligence and research before buying and selling. But in essence, quick summary, team is doing amazing in my opinion. And I've mentioned this in the chat before, is everything they said they'll do, they've been hitting them. I don't think there's something that they said they would do and they haven't done yet, in my opinion. Like literally everything so far for the most part. And if things continue on this path, basically in essence, every level becomes a new foundational level as a baseline, and we're just basically climbing up top of the ladder kind of thing, right? As not like it is taking time, but it's happening. So it's a great path overall, or a great direction that the company's doing. And let me see. They said that they paid taxes they owed, so does that factor on the profits too? Yeah, I gotta look into that too. By the way, good question, Knight. They said they paid taxes. I just gotta look into this deeper into the earnings report to see what it impacted fully, or yeah, I'll get back on that and post it on the video for sure. But good question for sure. And that's basically for today's video. I apologize. I should have been more collected for today, but a little bit woke up a little bit late, unfortunately. Sorry about that. Thanks again for watching. Take care. God bless and peace. I'll see you guys in the next video. Peace.